Good early afternoon, late morning, depending on what part of the United States you guys are on. Any case, going to go ahead and go through some charts that were suggested by some users this morning and give you my chart analysis and my thoughts on whether or not they are a go or a no-go for trade. First one up, KLIC. And simply, I'm using a chart here that comprises of the Bollinger Bands, the 10, the 20, and the 50-day moving averages. You got volume down here and then a short-term stochastics measure. So that's about it. I keep it pretty simple. This is a 5-minute chart, 30-minute chart. I do like to trade on multiple time frames. That helps me synchronize my trades, my entries, and my stops as well. See hidden support levels, resistance levels, etc., etc. And just over here, you got some of my watch list and stuff that I like to watch. So, all right. So with KLIC, there is some intrigue to this particular trade. You have a level of resistance that it's quickly approaching. On the surface, you would assume that once it can break over that 1201 level, that it could run a little bit more. But what you also want to be cognizant of is that since mid-November, with the exception of 3 days, not counting today, that it has run non-stop higher. So it is, it's overbought. Even though the short term doesn't show it because we've consolidated here of late, it's overbought. I mean, the consolidation is good for it, but don't be surprised that once it hits here, it does give you like an initial head fake, a little what they would call like a pop, and then it comes back down. So I'd be careful here. Ideally, what I would like to see this do in order to get long on is a break out above it, get that pop, it comes back down, and see it consolidate for a few days right below or right above this support level. Does that, then that's where I would get long at. Volume, be careful about the volume because it doesn't look that fantastic. Volume buzz on today, for instance, is -60, which means there's not a lot of heavy enthusiasm for this particular stock. You have an inverse head and shoulders pattern, so you have a left shoulder head, right shoulder here, which is bullish, but you can see it's quite mature in the confirmation of this one, so it doesn't really play into the chart that much. Next one, AGNC. All right, I'm not a big fan of REITs, and it's probably more me than anybody else. I think they oftentimes set up fantastic from a technical standpoint, but their moves are often very small, and then they start becoming... like I said, it may be just me, but it seems like it always gets very unpredictable once I get into one of these things. I mean, I've had them to where I buy them at the close, and then all of a sudden they issue a statement that they're going to, just out of nowhere, no warnings, nothing. The books aren't even that bad on the stocks or on the ETF, but all of a sudden that they decide they want to issue more shares, so then the thing drops 10% after hours. I'm not a big fan of REITs, but ignoring the fact that it's a REIT, I'll give you my technical analysis because some people do trade these things successfully. It has found resistance before in the past at this 20-day moving average. So here, 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 and then it's found some support lately. So it hasn't broken below at this particular time. But what you do have is a bit of distribution right here after a solid bounce off of the $28 level, and it's gone up like 10% already. And now you're starting to see some distribution. So you have this support level that, let me see if I can draw a box here. Okay. This is your distribution, and you can see here where it's starting to drop below that point of distribution, that channel, and it's just slightly below it right now. So I think you can short it just from a purely technical standpoint, but like I said, I'm not a huge fan of REITs. So I would probably, if it was me, I'd stay away from it. And that's just a personal preference, but technically it sets up fine. If you're determined to short it, I would put my stop right above the distribution level, which is about 31.85, so you're risking less than 3% on the trade. My target would be a retest of this level back down here at 28ish. Next chart, AMZN. So Amazon, this is another stock, huge bounce, been on a tear lately, very overextended. I know the short term it doesn't show it because there has been some consolidation of late.
Andy, do you have any opinion of this WLT up here? See, we've got tails below.
But what you have though is you have a on Amazon you have this double top. You have a rise back into this resistance level. Here I'll mark it for you. Let's get rid of some of these old lines that I've drawn in the past. They don't mean much right now. So you got a retest back into this area here. I think it's a foregone conclusion that at some point it's going to pull back. But Amazon is one of those stocks that can go on a rally longer than you can ever think, and to start shorting it here when it really hasn't broken down, not even below the 8-day EMA yet, could cause you some heartache and lead to a quick stop out or a painful journey upwards being squeezed. So I would wait for some kind of confirmation in this stock. The first indicator would be breaking below the 8-day EMA and onward. So let's put this stock on hold and just come back and visit it maybe like 2 or 3 days from now. CROX. CROX is another stock that you got to be careful of from just a purely volatile, unpredictable nature. I've traded it in the past with success and not so much success, but what you have is this huge breakdown back in late October. It's created inverse head and shoulders pattern here by the left shoulder, head, right shoulder, and now it's looking at breaking out. So I find this actually a very intriguing pattern to possibly trade off of. My ideal entry would probably be around, just to get very exact for you, 13.79. So it's about 20 cents away from getting in. There's two ways to play this. You could get into it now, assuming that it would break out at that level. And if I'm guessing at this point, I would say yeah, it probably will break out to the upside, then head lower. But you don't have that confirmation yet. So, but by getting into it now versus waiting till 13.79, what you're able to do is keep the stop loss tight. So you can get in at 13.58 right now where it's trading at, put a stop at 13.15, and really have less than have about a 3% stop loss on it. So there's a lot of appeal there. And also what you do is you create your opportunity for reward a little bit more too. You just have to be aware that maybe like 15.85 could be the place to sell. You just have to be aware that you're getting a little bit early. Yes, you are keeping risk tighter, and I often do this many a times with my trades, but that it may not work out for you. So moving on, SIG. This is a stock that I'm in right now, and it hasn't really done much for me today yet. I mean, it's just a shade higher. I'm in at 54.01. You can see it's just consolidating nicely above that 8-day EMA. The part that's got appeal to it, I mean, is the fact that it is starting to break above this price resistance level that I had talked about yesterday. It's Christmas season. A lot of people buying jewelry, so seasonally, this is a good time for the stock as well. You can call this a bull flag, or you can call it a continuation triangle. Either way, you're not inaccurate either way for whatever perspective you want to take on it. But I'd like to see the stock volume pick up. Yesterday it was noticeably low. It's picking back up some more today. Right now, I mean, I'm pretty much keeping my parameters the same on this trade. I'm not going to change them at all. If it breaks below, this level here, this is where I'm going to be getting out at, which is below the recent consolidation level. My current stop loss on it is, I'm having to look through my notes here just to make sure I don't misstate what my stop is. My current stop on this stock is 53.25, so that's where I'm going to keep it at for right now. That gives me about 1.5% to play with. Really tight risk, good potential for reward on this trade. The other stock that I'm in, EW, consolidating nicely. It too, like SIG, has not really moved at all, up 0.25% today. But what you do have the benefit of is, breaking out above this consolidation point, or above this resistance level, and then consolidating right above it. So that was my main appeal, and it has like a little bull flag action going there, breaking above the 50-day moving average. So those are the trades that I am currently in. I got stopped out of ARRY today, and in fact, it bounced right back after I got stopped out. But that's the nature of trading. So it's right back where it opened at. I got knocked out at 356. I had tightened it up from. I'm sorry, I got it knocked out at 359. I did have it at 356, but I tightened the stop up a little bit on it. But that comes with trading. You know, I'm not going to get upset because I got out, you know, at 359 before it bounced back up. It's part of trading. You know, the stocks, they don't really care where you put your stops at. They don't care what your financial condition is, what you're in need of, or whatever else. So it's going to trade the way it wants to trade, and you're trying to predict those actions. For Chris, he got into GEO. This is a stock that you probably want to look at from the 5-minute level, because clearly there was some news that popped it up, you know, 6% plus in the morning. It's not really doing much. I would say the volume. Let's see what kind of volume. It's about 4.8 million, so it's got plenty of volume to it. You know, at this point, probably a move above 31.66 could get the engines in this stock going. For now, it looks like traders are just, you know, not showing much interest in it. So I really don't know what to tell you on that one. Not something that I would trade at this point. If I was still in it, I'd just probably keep my stop, you know, a shade below this consolidation level, like 31.40, and that makes it only like 1/3 of a more percent that you have to risk before getting out. And let's see, a couple of stocks that I'm watching right now. CLNE, you know, it's got a nice little rise back into the resistance here. From the long side, I'm still watching this LULU. It just can't seem to get back above and stay above that $73 level. It did yesterday, but it gave up those gains today. But this is sort of like the VRX trade that I took earlier this week, where it broke out, and you can see how nicely that one's done since. So different industries, different sectors, but still the same chart pattern. I'd like to see it do the same thing again. So that's going to be the segment for today. If you guys have any questions, just feel free to hit me up. I'm in the splash zone. So all the best to you guys. Bye.